Good morning, everybody, and thanks for joining us today. Welcome to the Prophecy International Annual General Meeting. To kick things off, I'll hand proceedings over now to Prophecy Chairman Ed Reynolds. Go ahead, Ed.
Thank you. Good morning, everyone, and welcome to our meeting. My name is Ed Reynolds, your chairman, and I'll chair the meeting today. It's now just past 10:30 a.m. Central Time here, and thank you all for attending our 2023 AGM. I have confirmed with our company secretary that we have a quorum of members present, and I accordingly declare this AGM open. My fellow directors are here as well: Leanne Challenge, Grant Miles, and Matthew Michaelwitz. Grant Miles is our company secretary, and in addition, we've got with us Brad Thomas, our CEO, and also Jane Gregg from our auditors, Grant Thornton, in case any questions head that way. Right, today we're going to start with a short presentation on the company operations by Brad, and then I'll conduct the formal procedures to attend to the three resolutions. Today's meeting is being held, as we all know, via the Zoom platform. So this allows all the shareholders, proxies and guests to attend the meeting virtually. All attendees can watch the live webcast of the meeting. In addition, shareholders and proxies have the ability to ask questions and to submit votes. So in order for the shareholders and proxy holders to vote at the meeting, you'll need to log into the Computershare online platform, which is a separate system. And for those entitled to vote at today's meeting, if you have not already done so, please log into the online voting portal by using the following details. And there should be a slide for that. I'm not sure if that is there.
Adrian got that?
Sorry, what was that? What?
There should have been a slide 1 for access to the voting platform.
I don't think I have it.
Okay, let me read it out then. For those that need to vote, anyone who's already voted is fine, but anyone who needs to vote, there's a website which is https://meetnow.global/ and then capital MY 9 capital QV 47. That will get you into the voting app. You'll then need to enter your holder number, which should have an I or an X prefix. You'll then need to enter your postcode for your shareholding if you're an Australian holder, or just select the country for non-Australian holders. And then the final step is to accept the terms and conditions and click continue. So if anyone needs to do that and has an issue, just give us a question, but I'm pretty sure it's the same one that was used last year. Okay, that can happen at any time. So during the course of today's meeting, the questions from shareholders and proxy holders can be submitted during the course of the meeting. So to ask a question, just please use the chat icon, which is at the bottom of your webinar screen, and type your question. Press enter at the end. I just ask that if you identify yourself as either a shareholder or a guest, and I believe we can also take verbal questions when needed. So please note that while you can submit questions from now, we won't actually address the questions until the relevant time at the meeting. But also note that the questions will be moderated. So if there are multiple questions on a particular topic, they'll be put together so that we don't repeat ourselves. So we may not be able to get to all the questions. We normally can, but we'll certainly provide all the time that we can to handle any questions. So just invite anyone who's got a question to submit them as early as possible. And we'll certainly do a check after all the resolutions have been put to the meeting and make sure that we have answered all the questions before we close off the meeting. So Grant Miles will look after the questions and let me know the appropriate time that we need to answer those. Just on the voting procedure. So voting today will be conducted by way of a poll on each of the items of business. In order to provide enough time to vote, I'll shortly open voting for all resolutions. So if you're eligible to vote at the meeting and you've entered that screen, the vote icon will appear at the top of your screen and will bring up a list of resolutions, just the three of them, and present you with the voting options. To cast your vote, simply select one of the voting options. There's no need to press a submit or enter button as the vote is automatically recorded. You've got the ability to change your vote up until the time I declare the voting's closed. So I now declare the voting open on all items of business. Please submit your votes at any time, and I'll provide ample notice prior to the close of voting. So shareholders are reminded that the board strongly recommends that you vote for each of the resolutions. I appoint Debbie Bernard of Computershare Investor Services as the returning officer to conduct the poll. We have, at the close of proxy votes, received votes from 57 members, representing 42.9% of the company's voting shares. So we will report to the ASX later in the day the results of the final voting position. And as we go through the actual voting, the proxy votes will be displayed, so you're just aware of the situation prior to any online voting. Okay, that's all for the introduction. I'll hand over to Brad Thomas to give his presentation, and then we'll get down to the actual resolutions. Thanks, Brad.
Thanks, Ed, and welcome everyone. I've had a quick look at the attendees and I see lots of familiar names and folks that have attended a number of presentations from us over the last 12 months and even over the last few months. So I don't think there's going to be any surprises today, but we will focus more on the opportunities and what we're doing going forward and some of the latest signings rather than rehashing the financials from FY23 as they've been available for some time. But let's just go through the presentation. Prophecy, as you know, is a pure play B2B software and SaaS company, and we have operations in 4 major regions, obviously in Australia and Asia Pac, in the UK, in the US, and in Manila. We have our own subsidiaries in the US, UK, and Manila, as well as 2 operations here in Australia. We're currently at about 110 employees globally, and in the last financial year, we generated 84% of our revenue from international markets, and we're very proud of our ability to earn export income for Australia, and have in fact won the South Australian Export Awards for Advanced Technology in the last year, and are finalists in the National Export Awards, which will be determined at the end of this month. So we're very proud of our ability to generate international income and bring export dollars to Australia. As I said, I won't spend too much time on FY23 performance, as we've already been through that very substantially over the last 6 months. All the financials are available through the annual report, and most of the people that I see on the call have already had quite an extensive exposure to these numbers and have already asked many questions. But at a high level, FY23 was a good year, good growth year. We achieved record revenue for the group in FY23, and it really did build a substantial ARR base for us, continue to build a substantial ARR base for us going forward into 24. And as always, we're very proud of our ability to acquire some of the largest customers and government agencies in the world to our products, and we've been successful in that in 23, and we continue to be successful doing that in financial year 24. And I'll talk more about some of those successes as we get through the presentation. Just quickly around the financials, as I said, record revenue and record ARR in 23, record invoicing, and we didn't quite get to cash flow positive in FY23, but we are targeting that for 24. We certainly see positive cash flow as a very key success factor for the business, and we are very focused and dedicated on achieving a positive cash flow year in financial year 24. Cash balance at the end of the year was 11.8 million, and we continue to have a strong cash balance. I'll talk about the actual numbers as we get to the end of the presentation, and zero debt. The two products that we've got, while on the surface they appear very different and they actually focus on two different domains, Emite in the CX and customer contact center, customer experience market, and Snare in the cybersecurity monitoring market. At their heart, they're both data products, and it's all about being able to collect and integrate data from multiple sources to bring that together into a coherent whole, parsing information, indexing it, normalizing it, making it available for analysis, reporting, alerting, correlation, and sharing through a number of different means, both text-based reports, visualizations, analytics, dashboards. So while the products are different, we certainly see a number of similarities between the products. And as we're moving more and more into cloud native technologies, we're starting to see the ability to be able to take both technology and learnings from one product and to share that across the other product. And we see that continuing and increasing as we go forward. Both markets are very, very substantial. The cloud contact center market is growing very, very substantially. It's a multi-billion-dollar market today and growing at more than 20% compound annual growth rate. And we still see, many, many years ahead of us of customers migrating from legacy on-premise systems to the cloud and having increasingly complex SaaS application environments being used to deliver CX. And I'll talk about one example of that a little bit later in the presentation. Snare, of course, in the cybersecurity market, that's a massive market. Security analytics is huge. It's an $18 billion market and growing at 18%. The specific log management section that we're in is also a multi-billion-dollar market and growing very fast. And we see a massive opportunity continuing in that market. In fact, we were talking to one customer this week that's really only monitoring 15% of their environment. So many, many customers have huge security holes in their monitoring. They have a lack of coverage, and there is a real trade-off between cost and security that we're helping our customers to overcome. So Emite, for those that aren't aware, is it looks like a visualization tool, but what it really is a data integration tool. So we absolutely enable visualizations and reporting, but the key to being able to do that is our ability to get the data from multiple systems and sources. Now, we've been in this CX market space for about 5 or 6 years. We have a substantial amount of IP in this market, and we understand this market space very deeply and see a lot of value and opportunity for us to generate very significant revenues from this CX market space going forward. So while our data integration capability technically enables us to integrate any application, we see a huge amount of opportunity in CX, and that's where we'll continue our focus in the short to medium term. What we are doing, though, is we recently introduced a product called Emite iPass, which is integration platform as a service. Really, it first came out in late FY23 as a beta product, and we're just about to go into full general availability very shortly. We have customers trialing this technology today and using this technology today. And this enables us to connect to effectively any industry standard application and integrate the data very, very quickly at very low cost, providing incredible speed to value. what we're seeing today in the market is that there is a huge cost of integration for many, many customers. They're spending millions per annum in integrating applications together to gain business value from the data. It's incredibly difficult for most customers, if not impossible. And that's a problem that we're solving for our customers, and we see significant opportunity to continue to do that. As an example, at the moment, we are working with two of the leaders in the cloud contact center market space. And if I just click on some little circles here, you'll see Genesys there and Amazon, and they are just two of the players in the contact center ecosystem and market. And as you can see from the range of other players, there is a huge additional addressable market for us in being able to almost instantly integrate with any other platform. So we've been very successful with eMite over the last few years in growing that business with Amazon and with Genesys, but we see a very significant opportunity to expand our addressable market by using our integration capability to really integrate to any platform in the CX market. And a great example of that is, here is a customer that we are just about to sign. I'm actually expecting the contract to land in my inbox today. This is a large multinational European food delivery business, and their environment looks something like this, or look exactly like this. They have 4 instances of Calabrio, which is a workforce management tool. They have 7 instances of Zendesk, which is a chat and service desk tool. They have 3 instances of Salesforce. They have 4 instances of Playvox, which is a quality management tool, and they have 8 instances of TalkDesk, which is their cloud contact center system. And all of these are disconnected. So their ability to get a single view across their entire environment for everything that's happening in their systems that they use to deliver customer experience is effectively impossible without a very powerful integration platform, which is what we're providing for them. So this is quite a significant deal for us. Even in the first iteration, it would be several hundred thousands of dollars per annum in recurring revenue. And we expect that as we deliver on these integrations, there'll be additional integrations generating additional revenue as we go forward. So I think this is a great example of the complexity that our customers are challenged by, and that eMite helps them solve in pulling data from multiple applications and systems and disparate data sources and turning it into a single visible visualization and dashboarding and reporting layer. On the Snare side, obviously Snare is a security analytics and compliance platform that enables our customers to answer the who got in, how did they get in, what did they see, what did they take, what did they add, what did they change, what did they delete. When the board or the regulators are asking you how bad is it, you need Snare to help you answer that question. It's a security monitoring, forensics, alerting, and compliance platform. And we have over 3,000 customers using Snare, 4,000 customers using Snare globally, including some of the largest companies and government agencies in the world. So one of the things we're very proud of, as I said before, is our ability to attract some of the largest companies in the world. And if you look at who's using Snare today, it's companies like the NFL, it's NASA, it's the Department of Treasury, it's a US Patent Office, it's Worley Parsons, it's the Australian government, Taco Bell, Pizza Hut with Yum Brands. And we have some of the largest partners in the world, people like NTT, Fujitsu, Optus, JTC in Japan, Nova Coast, Atos in Europe, as well as a number of local partners in each of the regions that we operate. And for the last 18 months, we've also been part of Team Defence Australia. So we're on the Australian Defence Sales Catalogue, and we work closely with Australian Defence and Austrade to promote Australian sovereign technology into international markets. And over the last few years, we've been at events like the Defence Suppliers Exhibition in both Japan and the UK, and have done a number of joint trade delegations with Austrade into international markets promoting snare. One of the great successes that we have with the business across both EMITE and snare is our ability to partner with some of the largest vendors in the world. One of the announcements we put out this year was about our relationship with Oracle and our invitation into the global co-sell program. This is an invitation-only program. There are about 40 software companies in the world that are part of the Oracle co-sell program. There are only 5 or 6 out of APAC, and Prophecy is the only one out of Australia that's part of this global program. And this enables us to get access to all of the Oracle sales organisation around the world, as well as their partners, who are some of the largest system integrators in the world, where they get remunerated and incentivized to sell Prophecy solutions, just like they'll be an Oracle solution. So we're at the very start of this relationship with Oracle, and we see a very significant opportunity to leverage their relationships with their customers and their partners to promote both snare and EMITE into those end customers and through those partners. We've been an Oracle cloud infrastructure partner for about the last 2 years, and we use a significant amount of Oracle infrastructure to deliver the EMITE product. Another interesting one for snare, which is also very recent and has come about through our engagement with Austrade in the US, is we've signed Carahsoft as a distributor for snare in the US. Carahsoft has a very significant focus on military defense and government in the US. They are a multi-billion-dollar organization and have a very significant downstream partner ecosystem selling into these market segments. They have over 4,000 downstream partners, and this gives us an opportunity to access both those partnerships as well as a number of the panels that you're required to be on in the US to sell to this sector. So again, we're at the very start of our relationship with Carahsoft, and we see a very significant upside opportunity for snare in this relationship, particularly in government and defense in the US. So for the first quarter of the year, this is the FY23. I might just pass over this, but I think some of the significant accounts that we won at the end of the last financial year, companies like agencies like the Australian Tax Office and BAE, Northrop Grumman's, and Macy's was probably the most notable on the EMITE side in FY23. And we also established some very substantial partnerships with JTC, Optus, Fujitsu, Nova Coast, as well as the ones with Oracle and Carahsoft. So we're seeing very substantial continued momentum in the market, despite the fact that the macroeconomic environment is challenging, and that selling into large enterprise and government has become more difficult and slower as increased amount of due diligence and larger numbers of resources inside our customers are getting involved in the sales process. And that has slowed the sales cycle. It's lengthened the sales cycle. It does take longer to get a deal done now than it was, maybe 2 years ago. But I think that's true of everyone, and it's certainly true in every market. Interestingly, operating in Asia, Australia, the US, and the UK and Europe, we're able to see trends across all of those marketplaces, and it's consistent globally that we're seeing more people involved in every sales process. We're seeing increased due diligence, and as a result, it is taking longer from the initiation of a sales process to getting to the point where we're closing a deal. If I look at Q1 now, at the end of October, ARR grew on both EMITE and snare, although we did have some of the legacy number drop away. So the total annual recurring revenue is pretty consistent, but we have had growth of both EMITE and snare. EMITE's up to 15.42 and snare's up to 4.63. So very, very consistent incremental growth on both EMITE and Snare in adding to subscriptions and adding to recurring revenue. We do expect the legacy revenue to cease completely in financial year 24. We thought that may have finished actually in financial year 23, but that's continued on a little bit in FY24. And we see a very significant continuing opportunity for both Snare and EMITE with the partnerships and the market tailwinds that we have around CX, the migration to the cloud, and the increased focus on cybersecurity, critical infrastructure, supply chain security, and dealing with businesses that come from geographies and countries that you can trust. So we see significant opportunity continuing. And as I said, we continue to be debt-free and with a substantial cash balance. And we're looking forward to a very successful FY24. And I might leave it there, Ed, and hand back to you.
Thank you, Brad. Thank you for that. Just before we get into the full matters of the resolutions, I just thought I'd check with Grant to see if there are any questions that relate to what we've talked about so far.
Yeah, there is, Ed, 4 questions from sort of Brad's presentation. So maybe if I read those out and Brad can comment on,
Sure.
on those. First one, which is a good question, with the move from Snare from perpetual to subscription. Of the Snare subscription revenue you receive, roughly what are you receiving in the first year as a percentage of what you would have previously received as a perpetual license?
Yeah, I think you can look at somewhere between around 30 and 40%. So, I've mentioned this a number of times in presentations that we've done. If you take a $100,000 perpetual license, which you would recognise upfront and take to the P&L almost immediately, what you're doing is that when you turn that into a subscription, that translates into around about, call it a third, a $35,000 per annum subscription license. So there is a reduction in the size of your sales contracts and the amount that you sell upfront, but you gain that as it compounds over time. And we've certainly seen that with EMITE. When we started with EMITE, the revenue went backwards as we moved to subscription, and is now accelerating as we continue to build that subscription base. So yes, there is an impact on revenue upfront as you do that transition, and it basically works out to about a 1/3.
Excellent, thanks, Brad. I think you touched on this one in your sort of presentation that came in at the start, but the ARR at 30 September of 22.56 appears lower than what was there at 30 June, despite the growth. But I think you commented on that with the legacy drop off versus
the legacy drops off. Yeah, and EMITE and Snare haven't quite caught that up yet. While both EMITE and Snare ARR has grown, it hasn't quite overtaken the reduction in the legacy revenue, but that will happen quite shortly, and we'll be back into positive figures.
Yep. This question is a longer one, so I'll read it out. Thanks for taking questions. I'm a shareholder. One question on the Snare sales environment. It's got a couple of parts, so maybe answer it as I go through, Brad. One question on the Snare sales environment. Are large institutions holding back investing even in the key cybersecurity capability?
No, they're not. In fact, companies and agencies are investing more and more, but there's always a trade-off between how much they spend versus how much they secure and how much risk they accept. So this is one of the problems that we're trying to solve for our customers. Some of the security monitoring solutions in the market are very, very expensive, very, very complex. They require a lot of skills, expensive skills to implement and maintain and manage. And our design approach is really to abstract the complexity and make it easy and affordable for customers to increase their security coverage, increase their security monitoring, remove any black holes or blind spots in their network security. And this is a consistent theme that we see right across all customers, whether it's a medium enterprise, a large corporate, or government. The trade-off between risk, cost, and security monitoring coverage is being done on a constant basis. So we actually see that this is an opportunity for us to help customers be more secure and actually reduce their security budget.
Good. All part of the same question. Why did Snare's maintenance recurring revenue drop by 900,000 this quarter, offsetting the subscription ARR increase? Additionally, Snare's pipeline is not higher at the moment compared to last year, 9.8 million versus 10.3 million.
Yep, and there's a number of factors there. So obviously some of the customers we've had on Snare, we've had for many, many years, and some do reach the end of their requirement, particularly some of the government and defence contracts, which are project-based. They may have a project that stood up for 5 or 6 years, and then it gets effectively torn down and dismantled, and there's no ongoing maintenance from that. They just stop that project, and it may move to somewhere else, but we may not pick that up. Other customers will move to other platforms, and we're currently probably running at about an 80 to 85% renewal rate on what I'd call legacy perpetual Snare licensing. We are transitioning some of those customers to subscription. We had a number of customers with secure works on perpetual that we've now transitioned to subscription, so the perpetual maintenance goes down as a result. And certainly any new customers in the commercial sector that we've been signing over the last 18 months, 2 years, we've been trying to move to subscription, and we have been doing that with great success. So there's lots of moving parts there, and it's none of them are a smooth curve. They're all determined on which contracts move at which time to which solution and which customers. So we expect we'll continue to see over time the maintenance go down as customers move to true subscription, but the speed that's going to happen is really unknown at this time. Snare pipeline, that's just a point in time measure. So pipeline fluctuates as deals come in, deals get closed, or deals disappear. So there is a significant amount of activity with Oracle at the moment. There's a significant amount of activity with Carasoft. There's significant activity with partners like Fujitsu in the UK and others globally. We also have some other non-traditional partnerships which are starting to bear real fruit. That they're not at a point where I can talk about them today, but we started to generate pretty significant pipeline, which is probably not reflected in that 9.8 million today. So it's really just a point in time. I think if you come back at the half, that number will have increased as we start to qualify some of the early stage opportunities we've got in front of us at the moment. So it's one for monitoring over time rather than looking at it at a point in time.
And a sort of a follow-up question from that sort of overall pipeline. Are we seeing much change in the deal size in the EMITE pipeline? Remembering, we had significant accounts last year with Humana and ATO. What about pipeline size at the moment with EMITE?
Yeah, I think generally for EMITE, we targeted at the 500 seat and above contact center, and we are seeing larger and larger accounts. I mean, if you look at our largest accounts here in Australia, you're talking about Services Australia, which can have anything up to 25,000 agents. ATO, who we have signed and are in the process of implementing, is about 3,500 agents. We have customers in Europe over 10,000. We have Humana in the US, which is over 25,000. We have some very significant large accounts. As an average, I would think that anything over 50,000 per annum in recurring revenue for us is a good sale. I think an average would somewhere be between 50 and 100,000, and anything over that into the 200s, 300s and above is certainly one of our largest sales. So I think if you go back in history when we first started selling EMITE into contact centers, the average contact center we were selling to might have been 50 or 100 seats, and our average deal size was probably $10,000 or $20,000. And now our average deal size is much larger, and I would suggest it's somewhere in the $50,000 to $100,000 range per annum.
Good. Just a couple of other questions, Ed. A couple of questions, Brad, from some, I assume some people that have had other presentations from you in the last month or so, maybe a material UK defence contract, where that's at.
Yep, we're working with our partner there at the moment around the procurement timeline for our software. We do expect something this calendar year, and we're just working through exactly how much of that agreement we're going to secure this year. Depending on how it gets procured and when it gets procured, over the life of that contract, I'd expect that to be, almost into seven figures, but it just depends on the timing of how that gets procured. And we do not know yet exactly how that's going to fall over the next month or two. So that's in progress. Stay tuned. As we get more information, we'll update folks, because it is a substantial one.
Good. Another good question. As the products are pretty essential to customers, are you able to increase prices without too much pushback?
Good question.
Yes.
If you took the without pushback out of that question, I'd say yes. But there's always customer pushback. But there are certainly opportunities to increase prices. We have a very strong product innovation pipeline for both Snare and Emite, and as we release new capability into the product, we are always looking to monetize those capabilities separately. So if we can increase pricing as we increase functionality, we certainly will do that. I think as we get more information on where the market's going, particularly on the Snare side, I still think Snare is probably a little bit under monetized for some components of the solution, and we're looking to address that over the next few months. But yeah, we're certainly trying wherever we can. We also have to be realistic in that we have fractions of the market in both of these addressable markets, and acquiring customers to then sell more to is still our number one focus. There's no point having the most expensive product in the world and not being able to sell it to anyone. I'd rather get the customer and upsell them at a reasonable price point rather than try and maximize price and minimize customer acquisition.
Good. And then the last one, are we looking at any acquisitions?
Not at the moment, no. We've got plenty to do with our existing products. An acquisition right now would be a distraction. And I just think the market, Ed can probably comment on this, I think the valuations for tech stocks generally make it difficult for a meaningful acquisition. So no, certainly we're not actively pursuing anything.
Okay.
Ed, yep, I think that's all the question. Yep, no, that's all the questions. Yep.
We will have a look at questions towards the end if any more pop up. So if we leave it there for now and move on to the formal matters, as set out in the notice of meeting that went out to all the shareholders. I'll just start quickly by repeating our voting procedures. So voting today will be conducted by a poll on each item of business. Shareholders who've already submitted proxy votes are able to change their vote if they need to via the online platform. So each shareholder, whether voting in person, by proxy or by representative, is entitled to one vote for every share held by that member. Where a proxy has been given to the chairman without voting instructions, I intend to vote in favour of each resolution. Details of what votes have been already received I'll provide as we go through each resolution. So if you are eligible to vote at this meeting, a vote icon will appear on your voting screen. Select this to bring up a list of the resolutions, and they'll be presenting you with the voting options against each of those. To cast your vote, simply select one of the options. There's no need to press or submit, as they'll automatically go through. And just a reminder, the board does recommend that you vote for all the resolutions. Just before that, I'll just mention the minutes of the previous AGM held on the 25th of November 2022 were approved by the board and signed by myself in accordance with the provisions of section 251A of the Corporations Act. These minutes are tabled and there are copies available for inspection should any member wish to see them by contacting our company secretary. The notice of this shareholder meeting was made available to all shareholders as required by the Corporations Act on the 16th of October 2023. And unless there are any objections, I'll take the notice as read. Right, I can inform the meeting that the company's financial report for year ended 30th of June 2023 was lodged with the ASX on the 16th of October 2023, and a copy of the annual report was sent to those shareholders who requested a hard copy. Please note that Jane Gregg from our auditors, Grant Thornton, is present today if you have any questions on the annual report. Again, if you do, please feed them through on your question box. Just enter the chat icon at the bottom of the screen as you've done earlier. Do we have any questions to do with the annual report, Grant?
No new questions have come into the inbox, no.
Okay, I'll move on. The next item is Resolution 1, which is the re-election of Matthew Michaelwitz as a director. The board advises that in accordance with the constitution of the company, Matthew Michaelwitz retires automatically at the conclusion of this AGM, and being eligible, he is willing to continue as a director. The board endorses Matthew Michaelwitz continuing as a director. I now move the motion to consider, and if thought fit to pass, with or without amendment, the following resolution as an ordinary resolution: that Matthew Michaelwitz, being a director of the company, retires at the annual general meeting of the company and being eligible offers himself for re-election. And I propose his re-election as a director. Details of the votes received so far, we've got just over 31 million votes for, which is 98.17% of the votes. Another 413,000 that proxies held by myself. So a total of 99.48% of all votes for, and a very small number against. Are there any questions or comments on this resolution? If not, I'll now put the motion to vote on as an ordinary resolution. Anyone that's voting, you can proceed and vote. Just select the option, no need to press or submit an enter button. Okay, resolution number 2 is to adopt the remuneration report. This is a matter on which the views of the shareholders are to be taken as guidance by the board. Under the Corporations Act, listed companies are required to include as part of their directors' report a remuneration report, which includes specified information. The directors have prepared such a report to 30 June 2023, and it's included in the annual report on pages 9 through 25. Please note that the key management personnel of the company, including directors and their closely related parties, are excluded from voting in any capacity on this resolution, as set out in the notice of meeting. The Corporations Act also requires companies to put to shareholders a non-binding vote to enable shareholders to voice their opinion on matters included in the report. So I now move the motion to consider, and if thought fit to pass, with or without amendment, the following resolution as an ordinary resolution: that the company adopt the remuneration report for the year ended 30 June 2023 as set out in the company's annual report for the year ended 30th of June 23. We have received some 21.296 million shares for, which is 96.48%, another 413,000 proxy votes held by myself, a total of some 98.25% in favour of the remuneration report. Are there any questions on that resolution? I assume no questions there, Grant?
No, nothing came through on that one, Ed.
I will now put the motion to vote as an ordinary resolution. So anyone that's voting, just use the vote icon. And then the last one, resolution 3, is for the approval of a 10% placement facility. As this is a special resolution, I remind everyone that it needs to be passed by at least 75% of the votes cast by shareholders at this meeting, either in person or by proxy, or by attorney, and entitled to vote on the resolution. I now move the motion to consider and, if thought fit, to pass with or without amendment the following resolution as a special resolution. This one's a little bit tricky, but pursuant to and in accordance with Listing Rules 7.1A and for all other purposes, shareholders approve the issue of equity securities up to 10% of the issued capital of the company at the time of issue, calculated in accordance with the formula prescribed in Listing Rules 7.1A.2 and on the terms and conditions in the explanatory memorandum. Okay, the proxy votes so far on resolution 3, there are 29,267,000 votes for, another 415,000 votes held by myself as chairman, a total of 93.6% for, and about 6.4% against. Okay, are there any questions to do with that resolution number 3? So I'll just do a slight pause and see if anything comes in on that.
No, nothing. No questions on that one, Ed.
Okay, I'll now put the motion to a vote as a special resolution as indicated. You're invited to vote for resolution 3 by using the vote icon. Okay, that concludes all the resolutions. And shortly I'll close the voting system. Please ensure that if you're casting your vote, you've done so for all 3 resolutions. While we're waiting, any other questions on the board there for you, Grant?
Doesn't look like it, Ed. No.
Okay. Okay, I declare the poll closed and formally charge Ms. Bernard, our returning officer, to count the votes. As I mentioned earlier, the results of today's voting will be released to the ASX later this afternoon, as we normally do. Well, that concludes the formal business of the day. If there are any other questions, though, we're happy to take them before we close off the meeting. Are we done with the questions, Grant?
Yeah, nothing through the chat function.
Okay. Thank you very much for everyone's attendance, and thanks for some good questions. And we hope to see most of you back again next year. I will formally close off the meeting. Thank you.
Thank you. Bye.
Bye-bye.
Good. Thank you. Thanks, Ed.
Thanks,
Thanks
everyone.
Brad.